Hello, once again, I'm Schultz. Thank you for joining me. It is late evening, Monday, January 13th, and tonight I wanted to give you a glimpse of the 20-second peak model. I may have already presented this in another presentation, so if I have, please forgive me. But this is for, again, the peak for January 21st, 22nd, and show you some of the back testing as well to kind of give you a glimpse of the upcoming peak or high expected on January 21st, 22nd. I'm looking for, I think, wave 2 down into January 15th. So I'm looking for a second bottom or retest of the low on January 15th of the low that we saw today. So was looking for some type of bottoming formation in stocks around January 13th through 15th, and it gets really volatile down at the bottoms, right? Because it's just you get all the selling, and then you get a quick snapback of the buying or shorts covering, and then it goes rocketing up. So that's kind of what we were looking for this week, and so that's what we're seeing. And I still think that there could be a very strong probability that we see one more big down move again around the 15th, I think, around the CPI date, and then markets should, I believe, carry upwards into this January 21st, 22nd peak. So hopefully you're highly entertained and highly intrigued and blown away by the accuracy that I believe that I've upgraded my models with. Thank you so much for joining me. I'm B.R. Schultz, and you're watching another B.R. Schultz SP500 episode. If you sincerely enjoy my work and want to donate, feel free to use the PayPal link down below this video in the YouTube channel, or you can scan these QR codes. Thank you for joining me today. This is a 20-second peak model. It doesn't really say peak model on the graph, but essentially the brownish wave is the peak wave, I guess you might say, and the green wave is the bottom wave. So I've only used the brown wave or the red wave for this presentation, and so you can kind of see the 3 counts. The first one going out to December 17th, and we all know that the markets fell off a cliff after the Fed meeting date into the 19th low that the model predicted back then. Pretty amazing. It was fun to watch. And then oddly enough, this one actually predicted the December 26th peak. I believe this model also shows the January 6th peak, January 3rd, January 6th peak, but it's a little bit harder to see. And so I just kept it to what jumped out at me right off the bat. And so basically what I use these models for is to obviously to try to confirm what I see in other models or what I see in the Gold Wave model. And these are my secondary models. These aren't my primary models. But you can see that they actually do a pretty good job of predicting where the swing pivots will be, right? They only pick up really the pivot points of these end of cycle movements. So it's a very nice confirmation for the end of the mid-range cycle. And so again, I think all the videos I've made are pretty much the dates that are shown here, or have made videos for almost every date that it's showing. And so now you can see the 1, 2, 3 going out to January 21st roughly. And so then we're gonna have a holiday for Martin Luther King Day. The 20th will be removed from this data set, so it'll push back into January 21st, 22nd time frame. So it'll end up being like a January 22nd plus or minus 1 business day for the peak eventually. Obviously I might make another video or two, but essentially right now that's what it's looking like, a 21st, 22nd type of scenario where the markets top out, and then they'll change directions and go back down, I believe. So I thought this would be an interesting graph. I get some questions about how someone can learn about my work Essentially, I focus on a 3-point touch point rule, and any type of directional shift requires a three-point touch system. So I thought it was pretty cool when I stumbled upon it in my work years ago, and I've learned that it's a very powerful system, and so it's my own creation. I'm not sure if it exists already out in the world of people. Other people uses a 3-point touch system for stock market timing, but obviously all my work requires at least 3 touch points or more. And then the first and last point, highly critical that they're just touching the very edges of the curves for the trajectories going out into the future. So, and you can see that you got the 3 bottoms there on the brown line going out to January 21st. So that's your 3 touch points for that, and then you can see the 3 touch points on the black line going out to December 26th peak, and you can see the 3 touch points going out to December 17th. So hopefully I'm getting more and more on top of my game. Obviously I missed, I had to fine tune my models in late December there. That's why I missed the December 24th, December 26th peak. And so hopefully I've done a good job of updating the Gold Wave model, and I didn't really have to update this model too much, but now that they all sync, it's a lot easier, right? Because if they're all telling the same story, all have roughly the same date, then it makes it a little bit easier for the human brain to believe that if all the dates are the same, that in fact truly is a pivot date. So again, thank you for watching, and if you haven't yet, please subscribe. I'd really like my subscriptions to take off at some point, or at least my followers. And yeah, I'm really enjoying 2025 so far. Hopefully you're blown away by the results the model's been able to spit out. I've had a couple comments that have tried to be negative towards me, and think that my work was a scam. And so no, I think it's proved itself quite clearly by now. So it's always nice when the model proves itself. I don't believe I should have to argue too much for my model. I believe that if the model really is synced well and built well, and it truly is as accurate as I feel it is, that my words, I'll say, well, I think the model defends itself, and most people don't beat the MJ model. So it has failed at times, yes, it has, but I think in the majority of cases you'll find that the model is pretty accurate, highly accurate, and it's a lot of fun to watch. So, and hopefully eventually those critics will become followers and fans, and at some point, yeah, sometimes maybe 1 or 2 of those biggest critics will maybe become my biggest fans. Who knows? So hopefully my hard work will earn some of those critics that are listening. Hopefully I'm earning your respect through the model's consistency, and you can tell the hard work I put in trying to get better at the mid-range cycles. And so I believe that that's what I've done, and yeah, I think I've taken that next step in my trading skill level, and hopefully the results prove themselves. Thank you so much. It's late night, so if I sound a little tired, I apologize. Have a good one. Take care. I'm B.R. Schultz. And again, this model was also picking right around the March 21st, 24th bottom for markets for the major low with a zigzag, a 1, 2, 3 touch point, B.R. Schultz SP500 systematic way of timing markets with a zigzag. And then this is the macro peak for December of 2027. So in a nutshell, in under 10 minutes, maybe near 5 actually, you've got the complete rundown from the macro to the micro to the micro to the macro. All right, race fans, I'll catch you later. Bye. So hopefully you've enjoyed my show today. Warning, this is all forecast use only. Come here. You want to read this for me? What does that say? Forecast?
Forecast. Use only.
Only. Right. And what's this say?
Warning.
Disclaimer.
Disclaimer. I am not
A licensed investment professional. That's Latin. So say caveat emptor. Seek professional advice prior to investing. Investing bears risk
of
financial
loss.
Very good. And so basically this is saying if you ever try to invest in stocks or anything else, you could lose money. Warning, warning, warning. And all my graphs are subject to change. And not all the results are not always the same. Yeah. Thank you for reading for me.
You're welcome.
And that's it for today. I'm BR Schultz. Until next time, take care.